investing in yourself is the best thing you can do. Anything that improves your own talents. Nobody can take it away from you. They can run up huge deficits and the dollar can become worth far less. You can have all kinds of things happen. But if you've got talent yourself and you've maximized your talent, you've got a terrific asset. And so that doesn't mean everybody should go to college, but it does mean that any way you find to improve, communication skills are enormously important. I mean, I took a Dale Carnegie course that I paid $100 for, and it was worth a college degree. I advise students, as much as possible, look for the job that you would take if you didn't need a job. Don't sleepwalk through life, and don't say it's all going to be great. You know, I'll do this and I'll do that, and I'm just marking time to get to be able to. You really want to be doing what you love doing. And you can't necessarily find it on your first job, but don't give up before you find it.
You're going to make mistakes in life. I mean, there's no question about it. You don't want to make them on the big decisions, you know, who you marry and things like that. So there's no way I'm going to make a lot of business and investment decisions without making some mistakes. I may try to minimize them. I don't dwell on them at all. I don't look back. The biggest mistakes are the ones that actually don't show up. They're the mistakes of omission rather than commission. We've never lost that much money on any one investment, but it's the things that I knew enough to do that I didn't do. We have missed profits of as much as, you know, maybe $10 billion in things that I knew enough to do and I didn't do. Now, the fact I didn't buy Microsoft way back is not a foregone opportunity because I didn't know enough to make that decision. But there have been other investments where I didn't know enough to make the decision, and for one reason or another, I either didn't do it at all or I did it on a small scale. I was sucking my thumb when I should have been writing checks, you know, basically. And you know, those don't show up. There's no place where it shows missed opportunities, but I've missed some big ones. The triumphs in life are partly triumphs because you know that everything isn't going to be a triumph. And I would never get too hung up on mistakes. I know a lot of people that really agonize over them, and it just isn't worth it. I mean, tomorrow's another day, and you live it forward and just go on to the next thing. The nature of what I do means I have to think pretty much independently. Because if I take a poll, in effect, I'm going to do what everybody else is doing, and I don't think much of that usually in investments. And so I have to have an environment, I have to have a temperament personally that lets me think for myself. And I've got a terrific partner, a fellow named Charlie Munger. You can't find anybody any smarter, any better quality of anything. But we think a lot alike, and we do talk things over occasionally, but we don't talk them over very often because I know how he thinks, he knows how I think. He's taught me a lot, you know, and why should I pay for a phone call if I know what he's going to say? So if I need to get a cabinet around to make decisions or anything like that, I probably shouldn't be running the place. And that doesn't bother me to have the responsibility for it, but I just don't want to put it up to a vote because I've seen too many, particularly in the investment world, as you get larger and larger groups making the decisions, they get more and more homogenized. And I don't think you will ever get brilliant investment decisions out of a large committee. I always look at IQ and talent as sort of representing the horsepower of the motor, but then in terms of the output, the efficiency with which the motor works, that depends on rationality, because a lot of people start out with 400 horsepower motors and get 100 horsepower of output, and it's way better to have a 200 horsepower motor and get it all into output. And so why do smart people do things that interfere with really getting the output they're entitled to? And it gets into the habits and the character and the temperament, and it really gets into behaving in a rational manner. It's not getting in your own way. As I say, everybody here has the ability absolutely to do anything I do and much beyond. And some of you will and some of you won't. The ones that won't, it will be because you get in your own way. It won't because the world doesn't allow you to. It will be because you don't allow yourself to. You want to associate with people who are the kind of person you'd like to be. You'll move in that direction. And the most important person by far in that respect is your spouse. I can't overemphasize how important that is. And you're right. The friends you have, they will form you as you go through life. And make some good friends, keep them for the rest of your life, but have them be people that you admire as well as like them.
I have an old-fashioned belief that I should expect to make money in things that I understand. And when I say understand, I don't mean understand, what the product does or anything like that. I mean understand what the economics of the business are likely to look like 10 years from now or 20 years from now. I know, in general, what the economics of, say, Wrigley chewing gum will look like 10 years from now. The internet isn't going to change the way people chew gum. It isn't going to change which gum they chew. If you own the chewing gum market in a big way, and you've got Double Mint and Spearmint and Juicy Fruit, those brands will be there 10 years from now. So I can't pinpoint exactly what the numbers are going to look like on Wrigley, but I'm not going to be way off if I try to look forward on something like that. Evaluating that company is within what I call my circle of competence. I understand what they do. I understand the economics of it. I understand the competitive aspects of the business. So figuring out the economic consequences, TV, I think there's, 20, 25 million sets a year sold in the United States. I don't think there's one of them made in the United States anymore. I mean, you'd say TV set manufacturer, what a wonderful business. Everybody, nobody had a TV in 1950. Everybody has multiple sets now. Nobody in the United States has made any real money making the sets. They're all out of business. The Magnavoxes, the RCAs, all of those companies. Radio was the equivalent of the over 500 companies making radios in the 1920s. Again, I don't think there's a U.S. radio manufacturer at the present time. But Coca-Cola, was it 1884 at Jacobs Pharmacy or whatever, and the fellow comes up with something, a lot of copiers over the years. But now you've got a company that is selling roughly 1.1 billion 8-ounce servings of its product, not all Coke, Sprite, and some others, daily throughout the world 117 years later. So understanding the economic characteristics of a business is different than predicting the fact that an industry is going to do wonderfully. So when I look at the internet businesses, or I look at tech businesses, I say this is a marvelous thing, and I love to play around on the computer, and I order my books from Amazon and all kinds of things. But I don't know who's going to win. Unless I know who's going to win, I'm not interested in investing. I'll just play around on the computer. And defining your circle of competence is the most important aspect of investing. It's not how large your circle is. You don't have to be an expert on everything. But knowing where the perimeter of that circle of what you know and what you don't know is, and staying inside of it, is all important. Tom Watson Sr., who started IBM, said in his book, he said, I'm no genius, but I'm smart in spots, and I stay around those spots. And, that is the key. So if I understand a few things, and I stick in that arena, I'll do okay. And if I don't understand something, but I get all excited about it because my neighbors are talking about stocks are going up and everything, they start fooling around someplace else, eventually I'll get creamed, and I should.
I met Bob Woodward, and he'd just come out with all the president's men, and all of a sudden, as a below 30 years of age, he was getting quite wealthy, and we had breakfast or lunch over at the Madison Hotel. He said, what do I do with this money? And I said, investing is just about assigning yourself the right story. I said, imagine Ben Bradley this morning said to you, what is the Washington Post company worth? What would you do if you have to write the story in a month? You'd go out and interview TV brokers and newspaper brokers and the owners, and you'd try and value each asset. I said, that's what I do. I assign myself the right story. And it's nothing more than that. Now, there's some stories I can't write. If you ask me to write a story on, what is some glamorous but non-profit-making business worth, I don't know how to write that story. But if you ask me to write a story on what is Potomac Electric Power worth or something like that, I can write the story. And that's what I'm doing every day.
It's been my painting for 50-some years. I get to paint what I want. I don't have to follow what Wall Street is telling me to do next quarter or something. So I own the brush, I own the canvas, and the canvas is unlimited. Now, that's a pretty nice game, and I get to do it every day with people I like. I don't have to associate with anyone that causes my stomach to churn,
I've said many times that if you get to be 65 or 70 and later, and the people that you want to have love you actually do love you, you're a success. I've never seen anybody that reaches that age. I mean, I'm not talking about somebody that's in extreme poverty or pain or something, but I've never seen anybody that, if they have a lot of people that love them, that is other than happy. And I've seen some very, very wealthy people that now at 86, I've seen a lot of people that have gotten older, and I've never seen anybody that is 70 or an age who felt good about their children that felt bad about their life. In all my experience, I've seen plenty of people with lots of money where it hasn't worked out well in the family.
They didn't feel good about their children.
Or the children didn't feel good about them. But whichever way. But they failed at the most important teaching job they had in personal relationship. And sometimes it happens for extraneous reasons. But I really have never met anybody, regardless of their economic circumstances, who felt their life was a failure. And I knew one fellow was extraordinarily rich. He put a lot of money in his kid's name. He didn't want them to have any control over it. Once a year, he would have dinner with them and try and get them to sign their income tax return in blank. Now, just imagine that with this case, 4 kids, none of them, he wanted to have enough confidence in them or to have, it's just crazy. I mean, he would woo them during this dinner and they knew exactly what was going on once a year, and then he'd bribe them sort of to sign their income tax return in blank so he could file and they wouldn't know what they had. I've seen just time after time when people have been success. I've seen plenty of the other too, but successes in business, failure, and I don't think they feel that good about life.
The whole long-term capital management, and I hope most of you are familiar with it, but the whole story is really fascinating because if you take John Merriweather and Eric Rosenfeld, Larry Hillenbrand, Greg Hawkins, Victor Agani, the 2 Nobel Prize winners, Merton and Scholes, if you take the 16 of them, they probably have as high an average IQ as any 16 people working together in one business in the country, including at Microsoft or wherever you want to name. So there's an incredible amount of intellect in that room. Now you combine that with the fact that those 16 had extensive experience in the field they were operating. I mean, this was not a bunch of guys who had made their money, selling men's clothing and then all of a sudden went into the securities business or anything. They had, in aggregate, the 16 had probably had 350 or 400 years of experience doing exactly what they were doing. And then you throw in the third factor, that most of them had virtually all of their very substantial net worths in the business. So they had their own money up, hundreds and hundreds of millions of dollars of their own money up, super high intellect, working in a field they knew, and essentially they went broke. And that, to me, is absolutely fascinating. I mean, if I ever write a book, it's going to be called Why Smart People Do Dumb Things. My partner says it should be autobiographical, but this might be an interesting illustration. And these are perfectly decent guys. I respect them, and they helped me out when I had problems with Solomon, and they're not bad people at all. But to make money they didn't have and didn't need, they risked what they did have and did need. And that's foolish. That is just plain foolish. It doesn't make any difference what your IQ is. If you risk something that is important to you for something that is unimportant to you, it just does not make any sense. I don't care whether the odds are 100 to 1 that you succeed or 1,000 to 1 that you succeed. If you hand me a gun with 1,000 chambers, 1,000,000 chambers in it, and there's a bullet in one chamber, and you said, put it up your temple, how much do you want to be paid to pull it once? I'm not going to pull it. You can name any sum you want, but it doesn't do anything for me on the upside. And I think the downside's fairly clear. So I'm not interested in that kind of a game. And yet people do it financially then without thinking about it very much.
One thing I will tell you that I didn't realize when I was getting out of school is how much the unusual person will jump out at you. And it isn't because they got 200 IQs or anything like that. It's really because of just how they behave, what they bring, the energy they bring, the commitment they bring, the quality of how they do things, how they treat the people around them, all kinds of things. But you will jump out much more than you might anticipate. One of the things you would want to be sure to do is, whether you like it or not, get very comfortable, it may take a while, with public speaking, for example. I mean, that's an asset that will last you 50 or 60 years, and it's a liability if you don't like doing it and are uncomfortable doing it. That also will last you 50 or 60 years, and it's a necessary skill. But a lot of the skills are just human skills. If you get the best out of people around you, that's a rare talent, and it doesn't correlate with IQ. It correlates with an attitude toward the world and toward other people, and it's a talent that if you work at early and you're really conscious about it, you don't have to show up other people. You don't have to be smarter than they are or anything else. You want to bring out the best in them. It will pay huge dividends.